Thanks for all who braved the early start time in Vegas. I'm Sporn. I lead prime brokerage and U.S. sales for BitGo. It's been a year and a half since the ETFs have been approved, and in that time, they've raised over 120 billion of assets under management. It's been great, and today we're going to talk about the history, where we are today, and the future of the ETFs. And we have a great group of panelists, and I'll let them introduce themselves.
Thanks, Adam. Hi, everybody. I'm Bruno Caratori. I am a co-founder and COO at Hashdex. So we're a asset manager and ETF issuer exclusively dedicated to crypto. We got a global presence in managing over 30 products in 8 countries, spanning from Europe to Latin America and, of course, the US. Most recently, we launched in the US in partnership with NASDAQ the Hashdex NASDAQ Crypto Index US ETF. So this turned out to be the first crypto index ETF of spot products here. Hand it over to you.
Hi, everyone. My name is Anton Kozlov. I'm the head of sales at 21Shares. 21Shares is a $10 billion specialist asset manager focused exclusively on digital asset ETPs. The company was founded in 2018, so we have a 6-year track record of managing exchange-traded products that are physically backed by crypto. We have about 50 products trading globally today. About 10 billion in assets across all products, and in the US we recently launched spot Bitcoin ETF in partnership with ARK Invest, currently at about 5 billion AUM, and our own branded spot Ethereum ETF as well. Personally, I've spent the last 6 years in the crypto space professionally. Prior to this, prior to getting into crypto, I worked in sort of the traditional finance space, S&P, Intercontinental Exchange. Yeah, I've seen kind of a few crypto bull and bear cycles, and very excited to still be in this space and to continue growing it. Over to you.
Hey, I'm Stephen McClurg. I'm the CEO of Canary Capital. We're primarily a hedge fund platform that also has filed for quite a few ETFs in the US market. Previously worked together with Bill at Valkyrie, where we launched some of the first crypto-related ETFs in the space.
My name is Bill Cannon. I'm an ETF portfolio manager at CoinShares. Thanks to Stephen, we had the great opportunity of working at Valkyrie first for 4 years, and then CoinShares acquired them last year in April. I would like to thank Adam, Claudia, and especially Chris for all your work with this. So thank you very much.
So why don't we start with some history? For many of you, it was a very long journey to get the Bitcoin ETFs approved. Can we talk through what that journey was, and when did you get a sense that the SEC was actually going to approve the ETFs?
Shall I start? So I can give my perspective. I think we'll probably complement each other here because we've seen different angles of that journey. Right? Hashdex wasn't present in the US in the early days. Like, you can argue that the history of the Bitcoin ETF starts as early as the Winklevosses in 2013, and the subsequent rejections. I think with Jay Clayton, I'm not sure if someone before him, but then we got to the Gensler era, which finally culminated with that January 2024 moment. And I'll speak a bit to what we saw happening there. Hashdex had a bit of a different angle then. We had a Bitcoin futures ETF at the moment that was really the only 33-act product around. And differently from other issuers at that moment, our view of satisfying the SEC's requirements for investor protection would be better met by converting that product into a spot product. So this is to say, we had been in that process since even before. I think one of the watershed moments was when BlackRock filed in the summer of 23. We had been working in our unique strategy from even before. And I'll tell you, Adam, and I wonder if my co-panelists here will agree, it was largely unexpected in many ways, right? People often don't remember that just a couple weeks before BlackRock filed, it was still crypto winter in many ways. The SEC had just announced that they were suing Binance, they were suing Coinbase, and the BlackRock filing put everybody in alert. I'm sure Anton will speak, because I think ARK and 21 Shares had a filing out, and folks were like, what's going to happen? And that filing was a little weird in the beginning. It was based on a future surveillance sharing agreement that Nasdaq and Coinbase would have, and at first the SEC rejected this. A lot of people were really doubting if that was going to fly, but folks got active in the space. From our perspective, it wasn't until the Grayscale lawsuit came to a conclusion in August of 23 that it became clear that the SEC would move forward, right? And I think a lot of people put it on the fact that BlackRock filed. We think it was actually the outcome of the Grayscale lawsuit that got them over the top. And we were just reminiscing here a few minutes ago, in between August of 23 and that January 11th, it was a very hectic period for all of us, especially the last few weeks. But I think Anton, Stephen, I know, has a long history with this at Valkyrie, so they may have different optics there.
Yeah, I mean, I agree. So our 21 Shares, our journey to the Bitcoin ETF started a while back. First filed in 2021, got rejected, filed again, got rejected, and then filed again early 23. To your point, I think the Grayscale case, end of 23 in August, them winning that case versus the SEC was a turning point. We also had issued a suite of futures-based ETFs, 40 Act, sort of as a proxy to the potential spot Bitcoin ETF, just to give investors options. So yeah, to your point, we were kind of not fully sure what's going to happen. But I think that Grayscale win really opened the door. We've been really persistent about the filings, and we were super excited when it ultimately happened in January of 24. Very hectic time. And what's really interesting is the tide turned really fast. That summer was the summer after FTX collapse. I personally worked in the space. It was a very rough time in terms of sentiment. It was pretty bearish, and things turned very quickly, very quickly. Within 6 months, you have like a spot ETF pretty much from that summer approved, and things got a lot better. So if we go through these periods, just remember things can change pretty fast in crypto, and we continue on as we always do.
Yeah, that week between Christmas and New Year's, the filing ruined a lot of. It's a great thing, but as far as time off with the family, that was non-existent.
Yeah, we got a sack of colds.
So we're seeing ETF demand greatly outweighing the number of new Bitcoin mined. As of a week ago, I looked at a stat that in May it was the ETFs bought 52,000 Bitcoin and only 11,000 had been mined. So have you noticed a change in the type of investors that are entering the funds, and what about the pension, endowment, and foundation space? Any interest that you guys are seeing? Anton, you want to start?
Yeah, sure. So yeah, we're seeing. So initially, when the spot Bitcoin ETF launched, it was very much the majority of the flows were retail, right? You have 13F filings that come out every quarter, 100 million or more in assets. Basically, you have to file, and you can kind of deduce what the retail flows are from that. There's some exceptions there, but for the most part, about 65, 70%, right, were retail flows initially. We're starting to see more folks from the wealth and RIA segment sort of get interested, ask very thoughtful questions about crypto. They've been researching. We're starting to see more allocations. Approvals in model portfolios as well, we're starting to see happen for the RIA platforms. Typically with an aggressive risk profile, but still very positive news. Right now at the wirehouses, we're doing due diligence, as I'm sure you guys are, and that hasn't come to fruition yet. But I think with that segment, things like track record, there's like reputational kind of risk, just going to take longer. But I think that's going to be a very big catalyst in the future, and I think ultimately they will approve these products. Seeing state treasuries kind of come online as well. New Hampshire and Arizona recently passed Bitcoin bills to approve Bitcoin allocations, or not just Bitcoin, but gold potentially too. So yeah, we're definitely seeing a lot more interest in adoption. State of Michigan retirement systems actually adopted our ETF, Bitcoin ETF. So yeah, we're definitely seeing like increased adoption.
Yeah, I mean, I'll probably go through the journey from the eyes of Valkyrie, because that's where where Bill and I worked really hard to get a Bitcoin spot launched. But while we were waiting, we decided to attack other areas that we thought that might have interest, such as Bitcoin on the balance sheet. And back then, this was even before MicroStrategy had made any kind of announcement that they were buying Bitcoin. And we thought, companies might start buying Bitcoin on the balance sheet. This is back in 2020. And so we launched this ETF, and it didn't get a whole lot of traction. Nobody really cared. And I think Tesla was the only one that was doing some things, and some other companies. We ended up shutting it down because I think we were just way too early. But and then in addition to that, we launched the first actively traded Bitcoin mining fund that Bill's still managing over at CoinShares, and it's absolutely killing it under Bill. Bill's just a great active manager. We work together. God, I don't even know how many years. We were at Guggenheim together.
15 years.
Yeah, managing portfolios together back then, and then we also launched the first Nasdaq traded Bitcoin futures ETF as well in the 40 Act form, and so we went through all these iterations. Now when we launched that, by the way, I called the top of the market. That was 4 years ago, and I was like, once Bitcoin futures has an ETF, that will mark the top. Sure enough, it did in October of 2021. Probably the SEC framework, when that's finally announced and launched, that'll mark the top of this market in this cycle. So you've got a little bit more to go, a little bit more pump to go before that gets announced. But maybe start selling then. But no, the Bitcoin spot ETF itself was quite a journey. I mean, we ended up having 11 issuers all going on the same day. So hopefully we won't have that kind of result going forward when new ETFs come out. But that is, it's quite hectic in the market when something like that happens. But overall, it's been a good thing for Bitcoin. It's been a good thing for the ecosystem. We've seen so many flows across the board on a daily basis coming in since those things were launched, over a year ago. And, really proud of what we've all done collectively. As Bruno said, a lot of us commiserated together and shared ideas and try to, triangulate and figure out ways where we could get it done. And, most of us, and you think issuers are competitors, most of us are friends. And, we all, in some ways or another, work together to try to, push forward, the overall ecosystem. We all win together.
I'll just say two things really quick. I think one, the February sell-off exposed holders of the fund. I think it was a couple $2 billion, like in mid-February. I think I read this like a couple weeks ago, where the unwind of this basis trade basically showed who were the real holders, organic holders, and I think that was really relevant to our industry to see who was holding these, right? Was it hedge funds? Was it family offices? Was it retail? Where was this coming from? I think what we discovered is that a lot of those original holders that did place the basis trade at the beginning of January and February of 2024, right? 1 year later, they were saying, you know what, it's got squeezed so hard that it's time for us to let go and try to come back. And that moment is now, actually. That moment is now. We're now seeing, I think this basis trade is approaching 9-10% from being 5%. So I think that is a really good moment. The other thing too, like Matt Kimmel and our research team did a great job, really quick analysis today, where he looked at the 13F reporting filings and found that he was looking at like any kind of correlations between Bitcoin holders and ETH holders, and he found out that only about which is probably not surprising, 25% of the Bitcoin holders held ETH as well, ETH products as well. Conversely, 92% of ETH holders also hold Bitcoin, which for me, really quick take from my aspect, is that as we get it, we're going to talk about this, as we get into more deeper products in the crypto space, will these holders will that kind of transcend into more holding, into more diversified products? But we'll get to that.
If I could just add one thing to that, we've also seen quarter-on-quarter growth of institutional holders, which I think is really important. Like, I don't think there's ever been a quarter since the ETFs launched that it's been negative. So despite outflows from hedge funds with the base rate tightening, we've still seen 5% growth quarter-on-quarter from Q4 last year. I think it's something around 1,700 institutional holders currently, which if you look at I think GLD, like gold ETF, right? They have like 2,200-ish institutional holders, so it's definitely increasing.
Yeah. Well, and I actually find that quite fascinating too, and it was expected that institutional investors would come in. Usually institutional investors don't hold ETFs because insurance companies, pension funds, sovereign wealth funds, they will typically ask a manager to create an SMA for them at a lower fee. It feels a little bit more private. It is a private placement as opposed to going into a commingled vehicle like an ETF. But since these ETFs have launched, we've seen large sovereign wealth funds, insurance companies, and pensions all come in. Now, I think the future is not institutional. The future is going to be more wirehouse-based. We already have retail audiences, but wirehouses are really where the future of the growth is. And I do think institutions will eventually start pulling back and moving into more private vehicles and SMAs. But for now, it's been a fantastic response. Nothing like we've seen before in ETFs.
When you talk about wirehouses, do you guys have any thoughts on when the Morgan Stanleys, the JP Morgans, BAM will start opening their doors? Because right now they're still gated. For many of people that I speak to, they say, hey, I still can't buy it, right, through those, on those platforms. Any thoughts on when that opens up?
Yeah, well, so usually the wirehouses have two levels of service, right? There's the what's a wirehouse? So wirehouse are brokerage houses. That's where your financial advisors sit. So and usually they have two levels of service, or sometimes multiple levels of service. For instance, they have their private client service, which is like their top 1%, 2% of clients, or 5% of clients that are ultra wealthy, and then kind of everybody else. Now the broad platforms they are gating it, but the private client service or the corner office service or the ones that have ultra high net worth, they are letting them in. But it's a and usually that happens because they have a little bit more power. They can say, I've got $100 million with you. You're going to buy what I want you to buy. Whereas kind of below that threshold, it's very strict on what they can and can't buy because they're worried about risk.
Yeah, and I mean, typically, the big unlock I think here is for advisors to solicit these products, because right now, clients can come in and purchase unsolicited, but advisors can't go out and solicit this stuff. So that's the big unlock. I mean, there's trillions in AUM collectively. And I don't know, you look at UBS, they have like 14,000 advisors that can really push this stuff. So I think that's the big unlock.
That's right.
So question for Bill, you lead trading for CoinShares. What does trading look like for the Bitcoin ETFs, and how do you make sure you get best execution? And I'd be interested to hear from others on how they look at trading as well.
Well, thank you so much. No, this process, it's kind of laughable because it is fairly simple. All of us know how complicated this process started, and now it's transcended into a more simple process, if almost easy. Probably my high school junior can do it now. But that's also understanding the risks. Typically if there's a create or redeem activity, what I do is more of an auction style process where I have liquidity providers. I reach out to, for example, BitGo is one of our main participants, our main partners. And so what I do is just simply ask them, I have to buy or sell this amount of Bitcoin at the BRR New York rate at 4 p.m., and they come back with indications, best one wins. It sounds simple. There is a type of strategy if both of them come at the same time. I'm fairly transparent. I don't necessarily haggle at all. I don't think it's becoming. And it's just, and it's a simple, and from that, what I would say is from that partnership with all the with all the liquidity providers, there is a sense of, I would say, again, lack of a better word, partnership, where we do try to make sure that they have a place where they can unload or place Bitcoin as well as the other products. So that's what we're trying to do going forward with these other spot products coming on board. I didn't have anything. I mean, that's pretty much the concept.
I'll add on to what Bill said, that we have something to look forward to in the near future, in that crypto ETFs are a bit on the different side, in that the SEC still requires them to do in cash creates and redeems, right? And this was, I think, something imposed as a precondition to the approval back in Jan of last year. I think their motivation was the SEC did not want the big banks who act as the authorized participants to be holding any crypto on their balance sheet at any moment. They imposed the cash and create, the cash redeems and creates, which interestingly, Hashdex in the products that we serve overseas, we were very well accustomed to this already. So it wasn't a mystery, and I think everybody figured it out very quickly. I think players were able to turn on a dime. I remember that within a few days, everybody was able to switch their processes, switch their documents to make that happen. But we'd like this to be in kind, right? I think, not least because it's the better tax treatment for the investors of the ETFs. And I think what finally enabled this is when this recent administration, the current administration, struck down SAB 121. So banks can hold crypto, and so pretty soon we should be seeing the in-kind creates and redeems, which will make the process a little easier for us issuers, and it will give end investors the better tax treatment.
I would say, like, I want to add to that. I say that's probably something that, I spoke about it with Nick, like a couple days ago. We worked together with their operations. Adam knows him well. He brought up a good point in terms of in-kind. I think what it does is it's good for the industry, it's good for us, for the partners, but I do think that there is a level of compliance where lawyers have to get involved, where in terms of where is this Bitcoin being sourced, what is the process of checking that Bitcoin. We don't want these Bitcoin being sourced in undesirable countries, right, and kind of cleaning it up, putting it into the system. I believe one of the institutions is trying to monitor where all these is trying to keep track, has established a program of monitoring Bitcoin transactions and everything to make sure that this is staying quote unquote clean. But I think that is, while I think it is engaging, it is an overall growth, I think there is a certain level of compliance that still needs to be handled, and it's literally brand new, like we're a week past from the approval.
Yeah, and the other thing is also with in-kind, that'll enable, Bitcoin whales, miners who hold Bitcoin on the balance sheet to more easily get into these ETFs if they want regulated exposure, for example. So I think that'll also be kind of unlocking a sort of a new channel of adoption for the ETFs.
So you've all seen good growth in the Bitcoin ETF since you've launched. How do you differentiate amongst the 11 ETFs, and how do you compete with the BlackRocks and Fidelities for allocations?
Yeah, the easiest way there is, and by the way, we used to do this at Guggenheim. I mean, Guggenheim's a big firm now, but it used to be really small, and we just had to be the best at what we did, right? Our funds, our private funds were always, kind of top 1%. And we would go in and go head to head with PIMCO and BlackRock and some of these other large firms. And they say, okay, people allocate to PIMCO and BlackRock because they're large, they're not going to lose their jobs by allocating to them. But typically what pension funds or insurance companies or even financial advisors do is they'll allocate to two different managers. And they'll choose the one that's big and well known and everybody knows about, and then they'll choose one that is a expert in the area. Because if you think about what a financial advisor's job is, it's not to make money for their clients, it's to get new clients. So their job is to grow AUM. And if they can call clients and pitch ideas and call new clients and pitch ideas and say, okay, we've got access to this one manager who is, all they do is crypto, they're experts, they've got great track record, great performance, they've been in it for a long time, they could pitch that. It's hard to say, yeah, we're going to pitch you the, BlackRock Bitcoin fund, right? So, so they'll invest in that alongside a pure play crypto advisor. So that's really where the edge is, and that's where you get allocations and how you compete with the larger players.
Yeah, I would also say, like, from a diversification standpoint, again, BitGo's been a great partner. I would say that being a professional pessimist and being fixed income with this guy, and one thing that I've learned is that you always want to diversify risk. You always want to make sure that from a custodian standpoint, from an LP standpoint, you always want to make sure that you're not putting everything in one space. So I think that that's really important for, like, all of us, in terms of this industry is still evolving, but I think it's the maturing process this conference is evident of it this year. But again, with partners like BitGo, with other partners that we work with, we're all growing together, and I think that that's really important.
Yeah, and I think all of us here play a big role in education. This is what we're all trying to do, what we're trying to do today. I think rising tide lifts all boats. As the industry is growing, it's great that there's smart people in this industry from all different backgrounds really helping to educate. And I also think, there's some nuances on the operational side that we all kind of do differently, like the way we settle cash for the APs. Some do free of payment, some do delivery versus payment. We have a multi-custodial setup as well. So BitGo, Anchorage, Coinbase to kind of reduce concentration risk. This is really off the back of feedback from our clients. So what we do is we just try to incorporate what our clients' pain points are and fix them and incorporate those solutions. So, yeah, I think personally, education is key, and it's great to have, like, smart people in the space who are, continuing on that journey.
I'll build on what Anton said. That's where we found success in our experience. The education you provide to the audience is a big part of the value proposition. Right? We at Hashdex we see the intermediaries, the financial advisors, as our main audience or main customer, and they've been in deep need of education, right? And you're right. After the way that it all played out last year, it became a competition on price for the Bitcoin ETFs. I think none of us wish it had been that. Not least because there's too much, like, it doesn't really matter if the price is 20 basis or 40 basis in an asset that has 60% annualized volatility. But with this said, we Hashdex. So I can't speak this too loudly here. We as a firm, we have a position that crypto is larger than Bitcoin. Bitcoin is formidable. And we've been able to provide differentiated products that are index-based. And where we found success, even with our Bitcoin products, despite competition from larger players, is that as we educate them and evangelize this idea of index investing, which is for the intermediary, it's even better. A lot of them have adopted our Bitcoin products too. So this is to say they value the partnership and the education tremendously.
And so before I open it up to the audience for questions, last question from me is, you all have other filings and obviously we spent most of the time talking about Bitcoin, but what's next in the ETF space for digital assets, and where do you see that going? And maybe I'll start with you, Stephen, because I know you have quite a good amount in front of the SEC, at least publicly disclosed.
Look, I think everybody right now is just waiting on the crypto framework to come out of the SEC. A lot of us have given comments to that staff that's led by Hester Pierce, and I expect that framework to get published probably in the next 60 to 90 days. It might go to Congress as well. So, but until that is complete and published, I don't think that there will be any other ETF approvals. And what that framework is going to do is essentially say, okay, within crypto itself, these are the requirements to be a security, these are to be not a security, this is what an NFT is, this is what a meme coin is, and there will be a separation of all the various types of cryptocurrencies, and then once they figured out what buckets everything are in, then you can decide, okay, now we can get to ETFs and other either public or private products, and how are they going to be classified from a regulatory perspective. And once that classification happens, then they might say, okay, well, what qualifies to be in an ETF? For instance, there's a lot of types of metals that you can get in an ETF, gold being the largest one, and then you have silver, and then you kind of get down to like uranium and platinum and palladium, and you might get to a point to where it just doesn't make sense to hold it in an ETF anymore. They're also going to look at things like volume in the US, size of market cap, a lot of various other factors to decide that whether or not this is going to qualify to be in an ETF on its own or to be in a basket of ETFs. I know, for instance, Hashdex is filed for an index that includes a lot of different things. So I'll be curious to see which things are able to be held and at what percentages. This is something that we used to deal with in the world of fixed income, where we attempted to launch a few ETFs in fixed income that held very illiquid securities like asset-backed securities, non-mortgage backed. And the SEC put strict requirements on us. We were trying to get 30%. They're like, no, you can't have more than 15. I mean, I went through all this back in 2009 through 2012 with fixed income. So it's not that much different in the world of crypto, and we'll see. We'll probably see very clear guidelines coming out very soon.
I'll go really quick. In terms of what I see as a future products, I think it's more transitioning to products that investors are already familiar with from the traditional finance world, whether that is more strategy involving, indexes, like something we didn't talk about, like in terms of portfolio allocation. I was going to say 60-40 is probably passé. Now I liked what Larry Fink said, 50-30-20, 20 being the alternatives. I think that is probably the way that we should be, I don't know. I think that portfolio strategy is transitioning. But that said, I think that what we're trying to do, especially at the CoinShares level, is we're trying to establish products that people can understand, that you don't need a half hour of introduction like we were talking about from educational spaces, that they could understand what the strategy is, what's it doing. A lot of these covered call strategies are now coming in play. People can understand that. They understand the risk reward. I think that is what we're trying to do. I think that's the next level. Obviously, there's a lot, the single coin ETFs are coming out. I think a lot of them are now August, October now, the next time. So again, we're already seeing this year is basically done. And but I think like going forward, a more diversified product sense in terms of indexes, in terms of groups of crypto. Europe already has that. CoinShares has been leading that way, definitely. We're trying to see that growth here in the U.S.
Just I'll add one thing. To strengthen the point that Stephen made, I think we were able to engage with the SEC, always seeking to contribute. They don't tell you much, but you can read the signals, right? And I think that they are indeed looking for a broad framework that they can use for every approval or rejection. I think, among other things, will get them out of the trap that they're in now, right? They're having to make decisions on 70 products, including a Millennia 2X. And this won't scale. I found out backstage that I disagree with Stephen a little. I think we may hear news as early as July. But this is just a prediction. It could take longer, but I'm very confident it will happen within the next several months.
With that, we're at time, so I want to thank the panelists for their partnership and all the insights that they provide today. Thank you.
Thank you for hosting.